Tuesday, 15th of March. Thanks for joining me today. I'm looking at gold, I'm looking at silver, and I'm looking at WTI crude, looking at some commodities. Interesting, very interesting. So this was, I think, last Tuesday. Yeah, that was the 8th. And that, I'll show you why that was important. Followed by the following day on the Wednesday, big red candle. Not quite an engulfing, a bearish engulfing because we didn't make a new high, but certainly a big negative candle, which is not something that you would have expected to see with such a big up day on the Tuesday last week. Bulls well in control on the Tuesday, and they were absolutely crushed on the Wednesday. A big bull trap there. All the longs in that big blue body were trapped into a losing position by the time the market closed on the Wednesday. Now, what did that mean? Well, if you were looking at your weekly chart, or if you were following me as a subscriber, of course, you would know that we were about to test the all-time high around 2072. We got to 2069, and the sellers just came in, or at least the profit takers came in. Somebody was selling big time because the market really collapsed. Now, you saw that on the daily chart. How did it look on the weekly chart? Well, very much a shooting star, a very small blue body there. So almost all the gains were lost by the time the week closed. The week opened at 1976 and the week closed at 1985. So we closed less than 10 points higher on the week, despite that huge rally on the Tuesday. Now, as I warned over the weekend, to my subscribers at least, this really did signal a potential double top. We were already looking at the potential double top, though, once we saw that big negative candle on the Wednesday last week. So it wasn't a massive surprise to see a confirmation on the weekly chart. And now we've got the big red candle taking us right down to the big support level at 1925, 1922. The 1978 level that you see there, the 23.6%, it did have something of an effect. When you see it on the daily chart, we had a low there at 1975, a low there at 1970. Even the next day, we overran as far as 1958, but the market did pick up. So there were some determined buyers trying to hold that level, that sort of mid-1970 area. But in the end, we broke down this week. Well, that was actually Monday. We're in Tuesday today, of course. So straight to my next target. And that is the 23.6, the 38.2% fib on the daily chart. But on the weekly chart, there is a big 23.6% fib level there as well. So the mid 1920 area is being tested. It's a big support level, ties in quite nicely with this swing high up here. That's at 1916. So if you're trying a long position, I would suggest a stop certainly below there. It gives you about 10 points, 10 maybe or less points leeway on the stop. And obviously, if that trade works well, we could be looking at 50 points. We could get up to 1975, 1980. Certainly very possible. Now, clearly, we start breaking below 1916. There's going to be more downside in gold. We'll look at that if it happens. But first stop for me would be this trend line down at 1890, a low here on the week of 1890 as well. Let's see if there's any levels on the daily chart we should be aware of on the downside. Well, we've just got this 50% fib down at 1877. So 1890, 1880, definitely a reasonable target if gold does continue low. We'll have a look at that later on in the week. Right, silver also heading lower. Not a huge surprise because, of course, we did spot this head and shoulders pattern here. Broke the neckline. Bit confusing because we did pop back up above it. But in the end, we have continued lower. And we've actually broken quite a good support level at 2500. Now, you can just see it was a bit of a fib level here. But if you were to look at the 4-hour chart, there's actually a trend line here, which I should probably draw in. Let me do that there. 1 second. There you go. There's my trend line as well around the 2510, 2500 area. Once that was broken, as I mentioned to subscribers, at least on the Telegram channel, that was the clear signal for the market to go down. Now, 2450, 2440, certainly a target. Not really seeing that as a strong support level. Wouldn't be at all surprised to see us hit 2400, 2390 for this move down in silver. When we look at the daily chart, if there was a recovery, and I really don't see it happening, but if there was a recovery, then we're looking at sort of 2530, 2540 as a resistance with these spike lows down here. I would imagine there'd be some longs wanting to get out if we manage to bounce back that far. Okay, I'm going to finish up with crude, WTI crude, which of course has been a lot of fun. There we go. Now, I thought we had something of a head and shoulders pattern, and I could argue that we did with a very steep neckline, and if that was a head and shoulders, then it certainly has been broken. Now we've gone straight to good support at what I was going to, well, in my report today I put it down as 97.50, 96.50. So we're testing that right now. I would suggest longs need to stop below 95.50, and if that breaks, then we should have certainly further potentially significant moves to the downside in oil. Seems like the panic's over in oil. So there is a longer term trend line. Where am I getting that from? Let's have a look at the monthly chart. That is coming from these peaks. So that's going all the way back to 2011. Actually, I think I need to redraw that. Not quite accurate enough for my liking. I need to get that peak there, and I'm going to get that peak there. Okay, so that actually encompasses the 97.50, 96.50 area, stop below 95.50. That would take us down to 93.5 probably. Look at this on the monthly chart. Look, we've rocketed up to 130.5, and don't forget 130.5 was my fib level. So although I wasn't brave enough to call a short position there, I did suggest that that's where you get out of your long positions. And wow, didn't that work? I wish I had called a short position there, but I just wasn't brave enough in such a strong bull market with this war situation just evolving at the time. Anyway, as you can see from the monthly chart, we're still in March, of course, and we're only in mid-March. So really, who knows? This could actually be one heck of a shooting star with a red body if we continue to go down in this month. On the back to the weekly chart, there you see it, testing the support level. We'll see if that holds. Okay, that's it for the commodities for now. Hope that's helpful. Please do like, please do share, please do subscribe so that when I release my videos, you can get an update immediately. And obviously this is very price sensitive information. You probably want to hear what I have to say as soon as possible. Try and take advantage of it. If you think that what I'm saying makes sense, please do leave your comments and any questions, and I would love to hear from you. Okay, I'm going to move on to some Forex markets and some stock markets now, so keep an eye out for when I release those. Thanks for joining me.